Hello everyone, I am Nur Alip bin Haryono. In this video, I will talk about my economic analysis on cryptocurrency adoption in the remittance market in emerging economies. Throughout the process of studying this issue, there are several steps that I did. First, to understand better about this issue, I did my research to find the definition of cryptocurrency. After that, I start performing my analysis. There are four types of analysis that I have done, which is creating the fitted line plot, performing cost analysis based on the existing published data, doing forward-looking scenario analysis, and try to find any study that could support such scenario, and lastly, performing an analysis on the possible risk that cryptocurrency adoption can bring to the stakeholders in this economic issue. Based on the findings of all my analysis, I suggest what policy implication can be taken by the policymakers. For this economic analysis, I choose two developing countries that also included in the survey done by Statista recently, which is Vietnam and the Philippines. The reason I choose these countries because both countries are among the emerging economies with a high rate of cryptocurrency adoption. Cryptocurrency is often equated with digital currency, e-money, virtual currency, and there is also when talks about cryptocurrency, people will start thinking about Bitcoin. Therefore, like this figure shown on the slide, digital currency is the broad concept of all these, where it refers to all types of digital monetary assets. Digital currency can be regulated and unregulated. E-money refers to the regulated digital currency that are issued by a country's central bank. We can say that e-money is a fiat currency but in digital form. Then there is a virtual currency where all unregulated digital currencies included in this subgroup, since it is issued by a private issuer other than the central bank. Virtual currency can take many forms, and the cryptocurrency is just a subset of virtual currencies that use cryptography technology in its system. Therefore, Bitcoin and Ethereum are just some examples of cryptocurrency, since there are more than 5,000 cryptocurrencies over the world. Moving to the analysis stage, first I created a fitted line plot to see the relationship between cryptocurrency adoption rate and the GDP per capita of a country. The sample countries are from the survey performed by Statista recently. I used the log GDP per capita as the dependent variable, and as shown on the screen, by using simple linear regression, it is observed that there is a negative relationship between log GDP per capita and the cryptocurrency adoption rate. This means that low and middle-income countries tend to have a higher rate of cryptocurrency adoption among their population compared to those high-income countries. However, only 28.46% of the variation in cryptocurrency adoption rate can be explained by the log GDP per capita, where the rest is explained by other factors. After that, I also did an analysis on the remittance costs from various channels. By using the published data from the World Bank, I found that sending remittance worth $200 through the bank will cost someone about 10.73%. The cheapest conventional way for remittance payment is using mobile money, which only costs about 4.36 to remit $200. Overall, on average, according to the World Bank, the global average cost to send remittance through the conventional channel is about 6.51%. This amount is double the targeted Sustainable Development Goals for remittance costs, which is 3%. The reason for the high cost in the conventional remittance market is due to the presence of intermediaries. However, for the cryptocurrency platform, the blockchain technology that is behind the cryptocurrency make the transfer of money from one party to another party without having to need an intermediary. This makes sending remittance using cryptocurrency will only cost someone about 0.8%. This cost is relatively cheaper compared to the conventional platform. Moreover, in terms of non-monetary costs, since cryptocurrency is decentralized and unregulated, the time taken for the remittance to reach the receivers is shorter compared to when sending remittance using the conventional channel. Therefore, a rational individual will surely choose the platform that has a lower cost to maximize his or her utility. So what will happen if individuals prefer to use cryptocurrency platform for sending remittance back to their home countries? In this forward-looking scenario analysis, I look at this matter. As a developing country, the use of cryptocurrency for remittance payment can occur in Vietnam and the Philippines for several reasons. Among the reasons is that both countries recorded a high number of their nationals living abroad, and both countries also have a high dependence on remittance payment from abroad. Then, according to the United Nations, many countries experience higher growth in per income capita among the bottom 40. Now we look at the statistic of GDP per capita and gross national income per capita for Vietnam. Based on the graph, it can be seen that from 2011 until 2019, Vietnam recorded higher annual growth of GNI per capita compared to the annual growth of GDP per capita for 6 years, which is in 2013, 2014, 2015, 2016, 2018, and 2019. The Philippines also has recorded a higher annual growth of GNI per capita compared to the annual growth of GDP per capita for 6 years as well, which is in 2012, 2013, 2014, 2015, 2016, and 2018. Therefore, income generated abroad brings a huge potential for the population in Vietnam and the Philippines. Next, both countries also have a high unbanked population. Based on the table shown, it can be seen that only about 30% of the population in Vietnam and the Philippines have a bank account, which means there is a high financial exclusion in both countries. However, Vietnam and the Philippines have sufficient infrastructure to support cryptocurrency adoption. The internet penetration for both countries exceeds 70%, with almost 60% of their population are internet subscribers. The mobile phone subscribers and access to electricity also show a quite high number for both countries. All these factors make the possibility for cryptocurrency adoption for remittance payment in Vietnam and the Philippines is high. So what is the implication for this scenario? For the immigrants, it means that they can have a cheaper alternative to sending a remittance to their family because using cryptocurrency for remittance payments. Based on the payoff matrix here, using the cryptocurrency platform, the migrants will lose about 1.6 US dollar to send 200 US dollar compared to using a conventional channel which calculated using the global average cost. The migrants will have to lose 13.02 US dollars for sending the same amount of remittance. For emerging economies like Vietnam and the Philippines, cryptocurrency adoption in the remittance market will reduce the developmental issues in the countries by reducing inequality as well as poverty. Using cryptocurrency for remittance payment will reduce the remittance cost below the SDG target of 3%. This will reduce the inequality among countries since every remittance corridors have a different average cost rate. The developing countries will gain an extra 20 billion US dollar per year from remittance inflow if there is a decrease of 5% in remittance cost. Financial inclusion also can be increased because by using cryptocurrency that only require people to have internet access and mobile phone to create cryptocurrency account, they can get access to digital finance to perform international transactions. A decrease in remittance costs also enhances the flow of remittance to developing countries. This will be beneficial to the remittance receivers in developing countries because they have extra money to make consumption. A study done by Yoshina et al. Found that a 1% rise in the remittance to GDP ratio could reduce almost one-fourth of the poverty gap ratio and almost one-sixth of the poverty severity ratio. This shows that cryptocurrency could reduce poverty in Vietnam and the Philippines indirectly. The next economic growth in the home countries also can be boosted because remittance receivers usually will use the money to make consumption for their living. They also will have better access to financial services, and when there is high demand for cryptocurrency services in the country, many startup companies will emerge to facilitate cryptocurrency exchange to national fiat currency. These startup companies can contribute positively to the national gross domestic product. However, it is undeniable that cryptocurrency adoption in the remittance market in the developing countries poses some risks. Based on the risk analysis that I performed qualitatively, I found that liquidity risk can be experienced by the cryptocurrency remittance receivers because to use the remittance, they need to convert the cryptocurrency to fiat currency so that they can use it in their countries. However, since cryptocurrency is not legal tender, anyone can reject to accept cryptocurrency. The acceptance of cryptocurrency will depend on the trust in the currency, and it is also has to do with the network effect because the utility the cryptocurrency remittance receivers derive from the use of this virtual currency depends on the number of people who accept cryptocurrency for payment purpose. However, in Vietnam and the Philippines, the cryptocurrency market for remittance payment in the countries are quite developed. For example, in the Philippines, there is already local companies such as Coins.ph that can facilitate cryptocurrency exchange to fiat currency. This company even have more branches than the bank institutions across the Philippines. For Vietnam, the country has a remittance platform that supports blockchain technology such as Cash2VN. The next concern regarding cryptocurrency is its legal status. Since the characteristic of cryptocurrency that is decentralized, no one has the power to control it. Therefore, many countries usually discourage the use of this currency due to the risk it possesses. The Philippines does not explicitly ban the use of cryptocurrency for payment purpose. Different from Vietnam, the country explicitly bans the use of cryptocurrency for the same purpose. A study made by Stolberg and Shepeleva found that the legal status of cryptocurrency depends on political freedom and access to electricity in a country. A more free country that has lower access to electricity tends to legalize cryptocurrency. The rationale for this is that full access to electricity might give signals to the policymakers to be more cautious that there is a high possibility for illegal cryptocurrency mining to happen within the country. Here the data for Vietnam and the Philippines. The Philippines has relatively lower access to electricity compared to Vietnam, and according to the Voice and Accountability Index that proxies the level of freedom in a country, shows that the Philippines has relatively high freedom than Vietnam. This index ranges from negative 2.5, which represents weak freedom, to positive 2.5, which represents strong freedom. The next drawback is the inability of cryptocurrency to serve as money. Due to high price volatility, cryptocurrency cannot become a unit of account, because frequent repricing needs to be done. Cryptocurrency also has the problem to become a medium of exchange because anyone can reject the cryptocurrency since it is not legal tender. Cryptocurrency also has a high possibility to lose its value in a short time, which makes it is not suitable to be a store of value. Last but not least, the cryptocurrency system also has a flaw. This is because cryptocurrency miners have the self-interest to gain worth from the system. They prefer to wait for the peak time to participate in mining activities because during this time, the fees offered by the users is high for their transaction to be added to the ledger. To solve this problem, the capacity of the system can be increased, but this is unfavorable by the miners because they will be paid with a lower fee, which makes miners do not want to participate in mining activities. This ultimately can collapse the cryptocurrency system. In a nutshell, it is undeniable that cryptocurrency adoption in the remittance market in developing countries could bring good economic implications to the migrants, remittance receivers, and the developing countries. However, the cryptocurrency system, which is still not matured, also brings some risks and drawbacks. Therefore, based on the economic analysis, policymakers can organize a national awareness campaign to educate the public about the risks posed by cryptocurrency. A research team or research organization can be set up in the developing countries to keep study the cryptocurrency so that once the system is matured, the country does not have to waste their time to benefit from the cryptocurrency adoptions. In the meantime, the policymakers can plan to increase the level of digital and technological literacy among their citizens, as well as publicly announce the country's stance on the legal status of cryptocurrency. The electricity industry also must be well regulated to prevent illegal cryptocurrency mining that could bring cyber risks to the country. Lastly, international cooperation should be formed to achieve the goals to reduce the remittance costs and also to share information and data regarding cryptocurrency. That's all for my presentation. Thank you very much and I hope everyone takes care of their safety and health during this pandemic.